Day trading, turning $500 into $5,000 in one day. Turning $500 into $5,000 in a single day sounds insane, right? But it's possible. If you understand the rules of day trading, risk management, and momentum. Today, I'm walking you through exactly how day traders pull off massive returns and what you need to know before you even think about trying it yourself. Let's dive in. First, let's clear something up. Day trading isn't gambling, but it isn't investing either. Day trading is all about capitalizing on short-term price movements. You're looking to buy low, sell high, or sell high, buy low, all within the same day. It's fast, it's intense, and it's not for the faint of heart. How do traders turn $500 into $5,000? It comes down to three key factors: leverage, volatility, and strategy. Let's break these down one by one. Leverage is when you borrow money from your broker to trade bigger positions than your account balance would normally allow. With $500 and 10-to-1 leverage, you can control $5,000 worth of stock. Some brokers offer even higher leverage on specific assets like Forex or crypto. But remember, leverage is a double-edged sword. It amplifies gains, but it also magnifies losses. Next is volatility. You want to trade assets that move. Stocks, Forex pairs, or cryptocurrencies with huge price swings are your playground. Low volatility means tiny moves and tiny profits. High volatility means bigger moves and bigger potential gains. But it also means bigger risks. Finally, strategy. You can't just randomly buy and sell. Successful day traders use tested strategies like breakout trading, momentum scalping, or VWAP reversals. They know exactly when to enter, when to exit, and how much they're willing to lose on any given trade. Now, let's walk through a real example of how a trader could turn $500 into $5,000 in a day. Let's say a small cap stock releases massive news overnight, like an FDA approval or a surprise earnings beat. The stock gaps up and starts flying at market open. You spot the breakout over pre-market highs. You enter a position with your $500 account, using leverage to control a $5,000 position. The stock surges 20% in 10 minutes. Your $5,000 position just earned you $1,000. You quickly lock in profits. You rinse and repeat 2 more times on similar setups during the day. Maybe another 20% move here, a 15% move there. If you stack small wins without taking big losses, you could easily scale that $500 into several $1,000s by the end of the session. Sounds easy, right? Well, it's not. Here's what most people get wrong. First, they don't respect risk. Day trading without strict stop losses is like driving a Ferrari blindfolded. One bad trade can wipe out your whole account. Pros risk only 1 to 2% of their capital per trade. Even when using leverage, they define their risk tightly. Second, they overtrade. If you force trades because you're bored or desperate, you're toast. Professional traders wait for high probability setups and only take action when the odds are stacked in their favor. Third, they don't manage their emotions. Fear, greed, revenge trading. These emotional reactions are what destroy most beginners. Winning big requires a calm, disciplined mindset, not adrenaline-fueled gambling. So what tools do day traders actually use to succeed? First, real-time scanners. These help spot stocks making big moves quickly so you're not late to the party. Second, level 2, data and time and sales windows. These tools let you see real-time supply and demand, showing where buyers and sellers are stacking their orders. Third, a solid charting platform with customizable indicators like VWAP, moving averages, and RSI. Technical analysis isn't magic, but it gives you a framework to make high probability decisions. And don't forget, it's not just about tools, it's about preparation. The best day traders have a morning routine. They review news, check gappers, map out key support and resistance levels, and mentally prepare before the market opens. Success in day trading starts hours before you place your first trade. Now, let's talk about compounding. You don't need to hit a home run every trade. Even if you aim to make just 10 to 20% gains per trade, and you stack a few of those a day while managing risk, your account can grow fast. But, and this is important, compounding only works if you don't blow up your account first. Protecting your capital is rule number 1. Here's a quick mental checklist before taking any day trade. 1. Is the stock or asset volatile enough to move significantly? 2. Is there a clear catalyst like news or earnings? 3. Can you define your entry, your target, and your stop loss before clicking buy? If the answer to any of those is no, skip the trade. There's always another opportunity. Should you try to turn $500 into $5,000 in a day? Here's the honest truth. It's possible, but it's rare. Most beginner traders lose money at first. It's better to focus on building consistency. Master taking small, smart wins first. Learn to lose small and survive. If you stay disciplined, consistent, and continue learning, big days will come. But you won't need to gamble to get them. Day trading offers incredible opportunities, but it demands incredible discipline. Respect the risks, control your emotions, and never stop improving. If you found this breakdown helpful, smash that like button, subscribe for more trading tips, and comment below if you want me to break down real live trading setups in future videos. See you in the next one.